you need a plan. You need to know where your references are, where your decisions can be made. And you'll see when this trades this area. Previous highs up to VPOT, clear zone to sell from basically 15 to 30. Now, that's easy to say, and after the fact, you look at this and you go, well, that was an obvious trade. The problem is, why would you sell it there? On the first piece of information you get, it's a hike. Why would you sell 30 ticks up on a Bank of England interest rate hike? Albeit, yes, it is somewhat expected, but it is not fully priced in. So there's your first risk. The other side of the trade is then 21.50. That's where the move down opens up. That's where your opportunity is. So whenever you go into any of these, you've got to look at it and say, right, where's the opportunity? How do I take this trade on? Of course, if you broke this area, and that would be more to the point, if you broke this area, then you're looking up towards 50 and then towards recent highs at 123. So with that in mind, key areas 15 to 30 to the upside. If you go up, you've then got this reference in here, which comes in at around about 75, 80 area as your reference to the downside. And then you've got 50. So let's go and have a little look at what exactly does happen. And we'll only look at the first sort of few minutes of this, because this is the bit that we're interested in. The jump, the drop, the stall, the pop, the second drop. So basically 5 minutes worth of movement. So I'll get this going. This is just as the piece of data is about to hit. So data hits, boom, there we go. And you can see we're trading up around 30. And this is where it's easy to say in hindsight, oh yeah, you definitely should have sold that. Why would you? But more to the point, once it comes down and you've read through the information, you now see that inflation could be dropping significantly. Once the liquidity starts to come back in, you then start to see much more trade. So that's how this volume gets built on your footprint down here. This is now much more your opportunity to have a go at selling. Around the 84 area, which was the previous VPOC, which is where you now start seeing trade two directionally, you can be happy to sell. Now, of course, the risk is we start trading higher. Think about it here. What are other people looking to do? They're probably looking to sell as well. So any movement up here and you see it stall in the high 90s, that's fine to sell. As long as you're not moving into this zone up here where there was no action. This is a completely empty market up here. So as long as you're not getting back above 22.00, you're okay to continue to sell this. So now, as the liquidity starts coming back in, and this is about a minute into the trade, now you're in a good situation. And we're now looking for the next leg down. The next leg starts to come, you start to feel the pressure coming in there. That's good to see. So that bit of pressure coming in, the bounce back goes towards 78, and then the pressure comes again. At this point, what I'm doing is I'm watching, right, where does the bounce back go to? Where does the low go to? So you see in there, we're now stalling at 65. The bounce back after that little bit of pressure was 78. So if you can get a short in the low 70s, you're in a good place. Alternatively, you've got to look for a sell as this part starts to push down. So we just traded 60. So we're now starting to move into this phase of the action. You start moving back towards 65, and we're now starting to hold below 65 somewhat. This was the initial bit, 78 to 65. We trade 60 and now back to 65. So you can then have a go at selling it around there. If you're trying to be passive about it, that's one way. If not, you're going to have to go aggressive on the break of 59. If we break through there, you want to see pace here, then you can have another attempt at selling it. So there we go, steady down, steady down. It's not exactly convincing at this point, so I wouldn't be rushing to sell. I think 64 still looks good, as does 73. So we now start to put in a little bit further movement down. There's not been much in this that has said, yeah, go on, sell it. Instead, it has been to sort of creep down the page. And that's fine. So as it creeps down, we start to stall down at sort of 51, 52, 53. That's around about the level that I talked about previously. This is the point where the break can come. It's not coming currently, so that's then a sign to sort of step away from this. So back up we go. This is where you can now once again think about selling on a pullback. Trade 64, that's where you could sell. And now you start to see this flick up there. Very quick, trades towards 64, we trade 70. This is where we previously traded. Very fast flick. That fast flick there goes all the way up towards 81. And this is why you don't place stops. If you placed a stop up above 78, you're out of this, and you probably got slipped to 81 as well. If you don't place a stop, you've now got yourself a situation where you've just seen that flick on a footprint, this imbalance up here, and we're now trading back at 68, or you will be in a moment. Once below 68, the move is back on, and now you can look for that second leg down. So it's about understanding the phases of move. I often talk about this, and this is what I mean. We're now back towards same areas again, 65. What's going to happen here? If you're looking for a short, or you've managed to sell some more and you've got short, this is all looking good. So the same references come back again. What happens when you get to 54? This is where you got a huge amount of buying. So down towards 54, you want to see the pace come in, the change from last time. So we're ticking it down, and this will be the last bit that we look at, is the how do you execute here. 54 trades, 53 trades, can't get back above 54. This is looking good. So be happy now if this starts putting any more selling pressure into these buyers. More selling here, you're willing to go for this. So be ready. There we go. 51 trades, 50 trades. Get some offers to come down. There we go. Now you'd be happy to try and sell. Got filled 2 out of 3, and the market then starts to go. That snap was the beginning of the next leg down that takes you all the way down to 00. And it's that snap which should be the point where you then have confidence this is not coming back. So that's how you want to try and trade the initial part, the fast bit of that move. I'm going to wrap it up there, guys, but go back through that. Look at it in detail. How do you deal with these types of movements? That's going to be invaluable for the next Bank of England that you trade. Learn it, learn the action, learn the way it trades. Don't get caught by those flicks up.